Welcome to Trading Lounge and the ASX CFD, and on the daily chart here, as you know, we've been working through this particular pattern through here, and the main points here are that the move down here appears to be in 5 waves. This is a corrective wave in one way or another, and that means that we'll get another leg here. So this leg here could equal the distance of this leg here. On the sort of shorter side of this leg here could also be 61.8% of the length of this wave here. So that will be something that we'll be looking at first up. And secondly, I've got this as wave 4 here, so as an A wave and a B wave and a C wave here for wave 4. But it could actually be a bigger bearish picture as well, which I've gone over before, and we'll go over that again maybe later next week as well. Let's just see how this moves off. And the SP 500 or the US markets, as you know, have also moved down overnight, so they've started their bearish trend now as well. So yeah, let's investigate this situation here. Just before I go though, is that this pattern that I've got here, I've got this as the A wave here, a triangle pattern here in wave B here on this low here, and then wave C up here for wave B. This is the highest point here in regarding these points across here as such. So it fits nicely there in this structure here. What I've done here is that this move down through here, I've called this wave 1 to here, and then all of this all the way over here is a complex wave 2 here onto this one here. Now on the CFD market, I mean, this is the highest, this is the high here out of these guys here. So this is the significant one. So wave 2 really needs to go there. If I've made a mistake in some way, then the mistake would be that wave B would be over here. So what I'll do, I'll need to sort of sit with this for a while and try and figure out the possibilities of that. But I'll just put that there for the time being. But it doesn't really matter for the time being either, because this move down through here, we're looking in 5 waves here, and we'll also be looking for it shortly to become the retested resistance of this market here. There is still a possibility too that I've got to point out here, is that this move up here is in 5 waves. So it's possible, it's slim, but possible that this is wave 1 here with an A wave, a B wave over here, and a C wave as 5 waves here, and then move up from that point. I don't think that's the case because of what we're seeing in the SP 500. But when you think about it, this move from wave 2 down to wave 3 here, this will be in 5 waves coming down here. Okay, so what I see so far here is that this is just wave 1 here. We'll come back for wave 2, and it might move down a bit further, whatever, but we'll look at that wave 3, 4 and 5 basically coming down here. So that's what we're looking for. So the next step in this is that we're looking for a bit of a rally here. Okay, now on the open, the banks and things will drop, so this has already been priced in. It will drop somewhat, it may even drop a lot. The normal thing that I find here working with the level here, well, you can just obviously see it here, this line through here, the 5-650 is important here. In fact, this line is so important here that I always find that it's more important than the 700 and also the 600 as well, because in terms of the trading levels, from number 5 here, which is the second strongest number in the market, and I consider number 8 the third strongest number in the market. So we've got 5 and 8, and halfway between those is this 65 number here. So that always sort of pans out as stronger than 700 and 600. But of course 700 will come into play and 600 will come into play. It's not like we ignore them, it's just that I find that this carries more weight. And in the balance of things, like at the moment it's support here, isn't it? And sometime in the future it's going to be retested as the resistance. So it is the centerpiece of this particular pattern that's going on here at the moment, because it is the support. We can see that 8 is the resistance here, and 5 will offer support here. So we'll just sort of point that out a little bit. So we've either got wave B here or we've got wave B over here. But for the time being, I've labelled it just wave 1 and wave 2 here. And it won't make that much difference because, as I mentioned, so far we've got 5 waves moving down through to here. So our job will be to see this little rally coming back into this space here. That will be, if we can see that in a corrective wave, then we know that will be coming down further. So at some stage this move down here will end. It's got 5 waves there already. I don't know how the with the banks open lower and other markets open lower, the metals market is still sort of pretty firm, but the metals can be sort of a little bit sort of fickle as well. They can be dragged along with the general market as well, so we need to pull that. But we have seen, you know, the US banks like Goldman Sachs finish its ABC correction and start moving down 2 in 5 waves. So I do believe we're on the right track. So let's just go into just go to the 4-hour chart here, just because it kind of keeps it simple. So we were looking at last time we spoke, we're in here, but we were looking at taking this low out through here. So hopefully that you're short in one way or another, and we'll continue to play that on the short side there. So this is the sort of complicated correction through here. It's really quite a, you know, it's a market that's waiting, and I believe that it was waiting for the US market to top out and move down, and that's what they've done on this exactly the same timing. So they've done the same thing at the same time on this point here. So normally what I find too is you can normally grab the distance of this here in terms of unit, and then look for that onto the downside as well. So it'll be interesting to see how the structure actually pans out the time we get down here. But at the moment, as I mentioned, we'll just take it bit by bit. We're looking for wave 1 here. I've got 5 waves in there already, but there's a possibility that we can just go 4, 5 down to here a little bit further, maybe even hit this trend line here. But at the stage, the S&P's got 5 waves down as well. So at some stage there will be a bit of a rally coming into play here with all of this, and yeah, so that's our sort of pathway at this particular point in time. I'm just going to save that. I'm just going to go to the hourly chart here and just point out where I made an error. As such, we were looking at it like this here. So we were on the sort of right track. We looked at this as wave 1, wave 2, wave 1, wave 2, wave 1 here. And I was looking for wave 2 that came back to the 61.8% mark. But then this just got bigger and uglier. And what actually happened here is that this high here on the cash market is higher than this one here. So that I can't even put wave 2 here on this case. I mean, I can because it's a bit lower than this one here, maybe all the same size, but on the cash market it's a bit higher, a point or so higher. So I can't label it like that. Possibly, we can, but what I've had to do is basically go to the most sort of probable fit, and that's to have wave 2 over here and work it like that. So just to sort of fill you in on this now, we'll go to the 15-minute chart here, and I'll just put this on to 1,000 here so we can fit it in. So basically the B wave here with wave 1 here, then an A wave to here, an A and a B and a C wave to here for the B wave, and then this up here for the C wave of of 2 here and then start counting this down here. So I've been looking at this. I've either got 1 and 2 and 3 and 4 and 5 here, and we bounce off the 650 area here. We come back up as an ABC, and we'll be looking for that 50-60% mark here. I doubt if it will come all the way back up with the pressure that it's under. So we can look at 5720, the 72 number here. We'll just see how it creeps up. Hopefully that we get back up over the 57 here, and then once it's above the 57, the very simple thing we have to do is once it's above there, we could short it up there if we wanted to, if we knew what we're doing. But if we don't know what we're doing, then we'll have to wait for it to lock back under the 57, and then we know that eventually it will drop from that point. I'm going to go to the tick chart now and pick up what I think is the right count here. So as I mentioned, with the on the 15-minute chart here, we were looking at wave B here with wave 1 here, and A, and then a B and a C wave. And then in this case, we've got the little A, little B, and little C in here for the B wave. And then looking at this as 1 and 2 and 3 and 4 and 5. And now that's a bit dodgy. I can even count that as an A wave to here, then an A and a B and a C here for the B wave, and then up for the C wave. So I'm not happy with all this so far, but I felt that we've sort of we've looked at the bullish side and the bearish side, and we are seeing this sort of bearish side here at the moment. As I mentioned before, this particular move up through here can be counted as 5 waves. So in reality, and I've got to look at all the counts. So this can be wave 1, and this can be wave 2 over here, as basically an A. Let's just look at this: an A wave, and a B wave, and a C wave down here. I don't think that's the case, and I need to sort of be able to eliminate that particular count, and I think we should be able to do that shortly. So my first inkling here, I've pulled this. This is 100 ticks here on this chart, but I've looked at the 10 ticks to pull this apart down to here. So I'm quite happy with this as wave 1 here. And then I was looking at this as wave 3, 4, and 5 here. So I was actually thinking this is going to be the end of it here. But, the banking sector's, the market's the ASX is going to open, the banks are going to fall lower, and other markets will fall lower. So I know this is already priced in here. But it's probably likely to be dragged down further through here. So a couple of things can happen. We could just keep cascading down, or we're going to have a correction back to the 61.8% on and cover this gap here. I do suggest keeping an eye on the S&P 500. The current low on the S&P 500 is just about the end of the move down, but once again, it can also continue to cascade down with very, very shallow retracement. So like this wave 1 and 2 here, that never pulled back 50-60%. Otherwise it would have pulled back up and retested the middle of group 2 here, or the supply up in here. So so the other way that I could count this here too, with a possibility, is actually having wave 3 here, and then a little bounce here for wave 4, and then wave 5. So we end up down here somewhere. So I think that one of the things is that it looks like we're going down, a lot further when we think about the daily chart here, for instance. So we're looking down, at 5.5 here, even possibly lower through here. So in one way or another, we really just, if you don't have any short positions in at the moment, then you need to kind of sprinkle them in a little bit and sort of manage that risk. But it certainly appears we're on the downside for this market, and you just everybody does things differently, But what I'm trying to point out here is that there's a trend starting, and you need to get some positions in there. And you need to think about carefully and not to overtrade, so you don't have your stops too close, and so on and so on. Everybody's a little bit different. You could probably just use the daily robo method as well, if you like, But if you don't overtrade, then you will be able to get to the trend there. Taking small profits and getting out of a trend while it's in your favor just to bank away a bit of profit is something that you need to get over, and you need to play the bigger game, so to speak, to get that money out of the trend. So this is an opportunity to do that, and yeah, we should be looking at a trend like this guy over here. So over here. So yeah, looks like we're out of the complication now. So shorting the banks is also on the cards as well. Alrighty, I'll leave it at that. Cheers.